time now to check in on the markets, investing topics, and the housing market among them with Krista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor, good friend of the show, rejoining us here on the program. Krista, welcome back. Good to talk with you on this Monday.
Thanks, Jimmy. Do you hear me just fine?
I do. You're coming in loud and clear. It sounds good. So how are you?
I'm doing well. I'm quarantined. I need a haircut.
I think so many of us need a haircut, and I'm going to try to get one today if I can get in, since they are by appointment. They're allowed now, at least where I live, my neck of the woods here in Colorado. So let me ask you, Krista Huff, the stock market, let's start there. Because on Friday, we got the worst jobs report like I could ever conceive of. Although it wasn't surprising, It was still stunning, sort of a shocking report. 20.5 million jobs lost. We just saw as well, Krista, we saw the labor force participation rate at its lowest level since 1973. I mean, these are bad numbers, but the stock market was up. It was up a bit. Why is that, do you think, and where do you think the market's at now? It's slightly down this morning, at least on the Dow.
I also read this morning Kevin Hassett from the White House Economic Council expects unemployment to get over 20%, which means 1 out of every 5 Americans who wants to work will not be able to find a job. And it's breaking my heart just anticipating it. And to a large extent, the stock market is not anticipating it, which is why the market's going up, even though all this bad news is about to unfold. I think investors tend to be naturally optimistic, and they equate current situations. They try to find past situations that are similar, and then they equate them. So if they say to themselves, well, the market fell in the past and then it rebounded, so they think that this market correction will be similar and that the market will rebound in a similar pattern. But this market correction is completely different from anything that might have happened in the last 30 years. Many of those had to do with financial and corporate excesses and housing market excesses. But this one is about the virus and the business lockdown. And we've never lived through a situation where people were literally told they can't go to work, they can't earn money, they can't sell their products. And so there's a lot of ugliness that's going to unfold as a result of that.
Now, here's the thing, though. I think that there are a lot of investors who might be looking, Krista Huff, at this and see, in their minds, they're thinking, okay, we're going to see worse jobs numbers coming out in the next couple of months. But if we continue to see reopening, and in fact, reopening of the economy starts to expand more and more states, things will start to bounce back more quickly. So maybe that's why they're thinking more optimistically, is that finally we're starting to see a lot of states that are beginning the reopening process. And so if that happens, I mean, I argued earlier on the show that if we can get things reopened more quickly, the recovery will start sooner than later. Whereas if the reopening is delayed for an extended period of time longer, then it will take quite a bit longer for things to bounce back. And I think maybe a lot of investors are erring on the side of things will bounce back more quickly because the reopening's starting.
All right, well, let's think about some industries where things will not bounce back like that.
Please.
You have the theater industry. I was talking to a theater CEO yesterday who was talking about various citywide and national theater organizations that won't be reopening until December or the next March, almost a year from now. So all the people in those industries will not be earning any money until their shows start up again. I was reading yesterday that the hospitality industry, which includes hotel and food workers, about 50% of them are expected to permanently lose their jobs right now. We already know that there's been devastation in the oil and energy industry, and we can just keep, airlines, we can keep picking industries and saying, wow, this is ugly, and yes, business is going to reopen, but how quickly is everybody going to get back onto an airplane? It's not going to happen. It's going to happen very slowly, which means they're not going to recall all of the laid off employees. They'll recall 10% of them or 30% of them, but an awful lot of them will run out of personal assets to pay their bills. They're going to be stuck figuring out, okay, which bills do I not pay? Do I need to sell my house and move in with my mom? Even entire families are going to have to make those decisions, because if you don't have money to pay your bills, you can't stay in the house that you're in. So the situation's ugly, and I'm sorry to say that, and it's breaking my heart.
So then, where do you see the stock market headed? How long until investors start to come to this notion of what you're presenting, that
Right.
maybe there's a lot more trouble on the horizon?
Well, I think investors might find out in the next, let's say by the end of June, as cities reopen and all of the closed, permanently closed signs start going up on the bakeries and the hair salons and all the small businesses that couldn't afford to stay open anymore. And people are going to be shocked. They're going to be like, I thought businesses was going to reopen, because there are a lot of people who have been refusing to believe that the economy is in for a really rough patch. They have been refusing to believe that everybody's not going to go back to work, but it's going to be in their face in June when they walk down Main Street and see six, stores boarded up that have been around for 20 to 80 years in their towns. So what I've been telling people all year is, A, we're going to have a big stock market correction, which happened, and B, the stock market is going to be in a trading range all year. So yeah, it's really nice that it's been on an uptrend recently, but then expect it to continue to go down and up and down and up as more and more bad news comes out. Anyone who has a lot of profit right now from investing in March and April, God bless you, but keep in mind that the market could fall right back down to the March lows.
Krista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor, our guest. And normally you're pretty optimistic, so I think this is the most pessimistic I've heard you, Krista. But there are always opportunities for investors in the market, even during difficult times. So here's the question. Where are you seeing those opportunities?
Okay. First of all, the companies that make technology products, the hardware, the software, the improvements within the technology products like NVIDIA and Netflix, everything that comes through your iPhone, your television, those stocks have mostly been thriving since the downturn. And that's because even when people are stuck at home, even when they're unemployed, they've still got their television, they've still got their computer, their phone, they're playing computer games on the computer, and so they might be investing in NVIDIA, which makes computer games look more realistic, for example. And they're investing in Netflix. Netflix is making lots of money because people are sitting at home watching movies, right? So anything technology-oriented has turned out to be a pretty good investment during this downturn. Conversely, I have been buying put options on airlines. Because as businesses reopen, that's when it's really going to be in our face that people are not getting back on airplanes to any degree that they formerly did. Those companies had to borrow a ton of money. Their balance sheet situations are ugly, and we're going to get worse bad news after the second quarter reports come out for airlines, which will be somewhere around, let's say, I think late July is when airlines will report. So those are two examples of industries that I would love or hate right now.
Krista Huff, one more question on the stock market before we shift for a few minutes to the housing market. Just to explain for folks who may not be very attuned to stock investing, the difference between puts and calls, because you mentioned put options.
Goodness.
So
okay.
Yeah.
Right. An option. Okay, so if a stock means you own a little piece of a company, an option means you're betting on the stock. So if you think that Netflix is going to go up, you buy a call option. A call means basically it's bullish. Okay, so you're buying a call. And if you think Netflix is going to go down and you want to bet on it, you buy a put. And as the stock goes down, your put goes up in value. So I have been buying puts on airlines, and I'm making money on them. And basically, when Warren Buffett announced that he cashed in 4 airlines, and that was like 2 weekends ago, that was a very big deal. Warren Buffett owned just under 10% of 4 major airlines: United, Southwest, Delta, and American Airlines. So I looked at all of their balance sheet situations, and American Airlines has a horrendous amount of debt, and that was prior to the current, any money they might have borrowed regarding the COVID virus. So basically, a company that has a lot of debt is very similar to a person having a lot of debt and then they lose their job, right? Like, oh no, they're in a bad situation. So I bought put options on American Airlines. And then the other one I bought puts on was Southwest Airlines, because even though they have a very low amount of debt, they had a very bearish price chart.
Mm.
It was just going down, 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 down. And in the stock market, the momentum just continues. So I bet against Southwest.
So it's sort of making your own prediction. This is what's going to happen with a particular stock, and I'm going to place a bet on. I'm going to sort of gamble that
Right.
I'm going to make money off of a put or a call, depending on what it is. Excellent explanation, Krista Huff. Again, Chief Analyst at Cabot Undervalued Stocks Advisor. Let's switch over to the housing market for a moment, particularly when it comes to baby boomers. Okay, boomers, we've got some issues to talk about here. You wrote a piece last November about the next housing crash and how it's closer than you think. And then now we have this crisis situation where a heck of a lot of baby boomers are out of work. Their retirement prospects are much more challenging now. They may have to sell their homes in this market. What did you notice then, and what are you noticing now?
Okay. Last summer, I was doing some housing market research, and it sort of solidified thoughts that I had already had. I was just imagining, you've got the baby boomers and then the silent generation, even older than them. And as people get older, they downsize. They don't need the huge house that they raise their children in. And frankly, it's a lot of upkeep. And as you get older, you get tired. You just don't have as much energy to clean the darn house and to do the landscaping. Or maybe you have the energy, but your knee goes out, because your knees are one of the first things that go out as you get older. That happens in your 30s. So imagine being 70 with a bad knee. Well, once you've got bad knees, you don't want to go upstairs to bedrooms. You don't want to go down to the basement for the laundry room and such. So you naturally get rid of the large house with multi-levels, and you go to a one-level smaller home that's easier to maintain and easier to get around. So first, you've got all these older people who are naturally selling big homes and moving to warmer places with smaller homes. And now let's fast forward. You have possibly up to 20% of American workers being unemployed because of the coronavirus lockdown and the continuing layoffs and bankruptcies. I mean, we're hearing about those every single day. So as people are unemployed, they don't have money to pay their bills. So first they're going to go through all their savings. Then they're going to cash in their 401k, IRAs, and they're going to spend that. And they're still running out of money. And so, Mark and Nancy say to each other, this is really expensive maintaining this house. Maybe we should go live in my mom's basement for a while and save this extra $3,400 a month that was going to all these different bills. And Mark and Nancy yeah, let's call mom and let's do that. And they put the house on the market. So a rash of unemployment will naturally lead to a lot of people selling homes, and the homes on the market will depress prices because it's going to be a buyer's market.
You know what's depressing about that? Well, everything is depressing about that. But one thing that just come to my mind as a millennial, there are a heck of a lot of millennials who probably just got out of their parents' basements. And now they're looking at, well, maybe I need to go into my parents' basement again. And of course, that's the younger side of things. But maybe that will help some of the boomers keep their homes.
Yeah, I think we're going to see a long-term trend now of families living together, multi-generational, much more so than ever before, simply because the individuals are not finding the excellent corporate jobs that they used to have that paid for their apartment. So like if my apartment costs $2,000 a month, the first figure $36,000 a year that I earn goes for taxes and rent, and that's just for an apartment. So you need a job that figure at least $20,000 more a year than that, so figure $56,000 a year, so that you can pay for other things like, more taxes and food and health care, et cetera. So you've got all these people who are, let's say, retail workers, right? Well, retail workers aren't earning $56,000 a year, and neither are food workers, and so many different kinds of workers. So you can't afford to live on your own like you might have previously. And so
And what's so sad about this, too, is that finally we were seeing wage gains noticeably in this economy, Krista Huff, where you were seeing those lower-end workers, in particular, the greatest gains when it comes to take-home pay were happening for the bottom quartile. And now they're being hit even harder than anybody else.
Yeah. One of the problems, in society was we we became this lifestyles of the rich and famous kind of society. And people weren't saving money, and instead they were paying money for all kinds of silly things like, pardon me, but manicures and fake eyelashes. Like, if you don't have any savings in the bank, what the heck are you doing with manicures and fake eyelashes and trips to Hawaii, right? The entire point of having savings in the bank is so that when you lose a job, unexpectedly, which is exactly what the coronavirus was, you have a cushion so you don't have to immediately panic. I mean, we know of some people who became very depressed and desperate just by losing their job, let alone not having work for 10 months, right? So maybe this will do a reset on Americans and the way we look at money and whether we save and are more prudent with it.
Very interesting points, as always. Krista Huff, Chief Analyst at Cabot Undervalued Stocks Advisor. Always great to get your thoughts here on Jimmy at the Crossroads. Thanks so much for joining us again.
Thanks, Jimmy.
Again, Krista Huff joining us, Chief Analyst, Cabot Undervalued Stocks Advisor. Thanks for watching this clip from Jimmy at the Crossroads. You do not want to miss a minute of engaging, intelligent talk. Subscribe today to the Jimmy at the Crossroads YouTube channel, and you'll be sure to catch our live broadcast. I appreciate your support.
I got Jimmy at the Crossroads, making sense out of no sense. Yeah.